Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, your old buddy Romulus. This show is brought to you by Backpack Trader. Our goal here is to help you become the best version of the backpack trader you can possibly become. And what does it mean to be a backpack trader? Exactly what you think it means. Go out, see the world, do what you want to do, and still pull in successful trades. And as we've journeyed through the market so far this week, we've been talking about this rally that has been in effect a little bit since the middle of June, but this particular little swing up here for the last week or so, about a week. And we discussed the high probability that the S&P 500 probably goes to the underside of that candle right there, that gap down at about 4017. Not too far from current levels, everybody. Not too far. Pay attention to that. It's real easy to get sucked into these bear market rallies. They happen all of the time, and they all look good. They all look like a bottom. But I can tell you that there's too many people out there looking for a bottom. There's too many people out there just so desperate to say, yes, I found the bottom. I bought it on the final day. That's not the important issue here. The important issue is to make sure that you're not losing any more money in your trading. Now, some of you watching these videos are not currently in the Centurion Legion. Many of you are, but some of you are not. If you're not, get involved. Join us. Click that link below right there to jump into our Discord. That is a free service. We do a lot of excellent communication about trading and investing in there. We teach you how to become the best version of the backpack trader that you can possibly become. My partner, Troy, that's him right there. He spent about 5 weeks in Argentina for late May until the end of June, essentially backpacking around Argentina, not with a backpack, but travel a little more in comfort these days. However, the metaphor still remains. I took the first 2 weeks of July off. I got married down in Florida and still was pulling out one great trade after another. Okay, you can do this. You can do this. You can live this life. You can go where you want to go. You can do what you want to do without having to spend 90 hours a week involved in these markets. So again, S&P 500, rising probability that it climbs up to the underside area of this neighborhood. A lot of traders out there around the internet trading world, the retail trading world, are really just yelling and screaming about, new bull market crossed above these moving averages right here, including what's called the 50-day average. Keep in mind, really, you don't have to go too far back in time to see this. The same thing happened over here back in the end of March, early April. Not only did the S&P 500 cross above these two moving averages, it also got above the 200-day moving average, which got just about everybody flipping mad about a new bull. And then look what happened over the next subsequent coming months. Now, it may not be likely that the S&P 500 sees a 16% drop like it did from here to here over the next couple of months. But the probabilities are that we have not seen an ultimate bottom in this market. Now, it doesn't mean, again, that the market is going to go dramatically below these levels, but there is a high probability that stock in the S&P universe, at least, will come down to this area between now and the end of September over the next couple of months. A lot of people out there, the bull switch got hit really, really fast, everybody. And that's a reason for some concern out there. Okay, that's a reason for concern. Prices got dropped anywhere from 25 to 35%, depending on the index. S&P 500 about 23%. NASDAQ market about 33%. Some of the foreign indexes down about 35% from their recent all-time highs late last year at the beginning of this year. And the prices were down. Okay, selling does seem to have abated a bit over the last couple of weeks. But the buying enthusiasm really isn't there either. And that's not how bear markets end. Okay, bear markets end because the discounts, the bargains get so enticing to investors that they can't help themselves. They start tripping over themselves and knocking each other out of the way to get their hands on as much stock as they can. And that's, you can see for yourself, that's just not happening right now. So we did have some earnings from a big tech company, a popular one from a while ago, Netflix, yesterday. And the stock put a decent number up here. This is a case of how much lower can you go? The expectations just were so low after this 35% gap down and then this 22% gap down. It just got so beaten down. Okay, it's not so much more lower that it can go, at least in the short term. Now it's up to execution. How much higher can it go now? I don't think it closes this gap over here anytime real soon, but stock does look like it can lift a little bit further. Tesla had earnings today. Okay, stock doing pretty well, up 9%, although Tesla bulls, they need that to go a heck of a lot higher. I mean, the stock all-time high, 1244, still quite a bit below that level, and will struggle over coming weeks as it runs into overhead resistance. Today, let the bull have its day, but a couple of months from now, late August, September, early October period of time, Tesla stock will be lower than where it is currently trading right now. Hopeful bulls are also still begging and praying that the semiconductor news out of Washington is everything they want it to be. Look, we already know they're going to vote a $50 billion package of tax incentives and some other cash giveaways to the entire semiconductor industry. And then after it finally gets signed off by the president, sometime the next week or so, I guess, a few days, stocks will most likely pull back. It's a situation of buy the rumor, sell the news. It is not going to be a panacea for these companies all the way out immediately. This is a long-term type of rolling situation. It's going to be a while, and these stocks have all advanced. AMD is just typical of what has been happening inside of the semiconductor space. Disclosure, I am now short AMD. My short position is a little over $88 a share. I expect a retracement in the stock to about 84 or so over the next week, maybe a little bit longer. Again, so I'm short AMD right now. Anyway, this stock looks a lot like a lot of the companies in the semiconductor industry, where there's been a pretty severe, sharp rally, but you can see the volume just isn't there. Okay, it's not even hitting. Not one of these days of this rally has it even hit its 50-day average of volume. Not one of these days. Not one. Let me stress that. Not one of the days of this entire rally. It's been a pretty good move. Not one of them has the volume hit even its 50-day average, let alone a jump above it, which is really what you need to see. So it's crossing above moving average resistance. It's also coming into overhead resistance where the stock saw previous support, which is now resistance areas. And I do expect AMD over the next week or two to be lower than it currently is right now. So again, the markets are hitting areas over right as we speak where there should be coming into overhead supply, whether it's right now, as in AMD's case, or a couple of 1 or 2% higher with some of the issues in the S&P 500. Don't confuse the money that you've made on the long side in the last week or two, or even from mid-June, to being a genius. Remind yourself of how much money you lost from late last year until the middle of June. Go ahead and look at your trading sheets. You should be keeping journals and accurate track of what you're doing in your trading. If you're not, well, you should be. Go ahead and look at the amount of money you gave back, amount of money you lost. My estimate is that it was anywhere from 20 to 40%, 30, 35% of your money, if not more. Remember that. Keep that firmly in mind. Okay, keep that firmly in mind. Do not start to confuse the money that you've made the last couple of weeks with some kind of genius that you didn't think you had from before. Okay, you just gotten lucky. That's all. The market's rallied. That's it. It just rallied. That's all it's been doing. Little bear market rallies going on right now. These are typical in bear markets. This market from here on out probably has a little more upside to it, but not too much. And by the end of September, regardless of how much higher it goes now, whether it's 0.5% or another 2 or 3%, doesn't really matter. By the end of September, we should be seeing lower prices. So take advantage of these higher prices right now. Get yourself positioned. I got a note from somebody yesterday. He was involved in some Apple stock that I thought was pretty good. Said with a possibility of the market reversing over the next couple of weeks and giving back a lot of these gains. He's long Apple. He said, well, what about tightening stop? There you go. Just tighten some stops or take some profits or sell some covered calls on your positions. There's a lot of different strategies you can implement. Start to build some short positions in there. Take advantage of the higher prices. Okay. This is your old buddy Romulus with Backpack Trader. Once again, thrilled for the opportunity to spend some time with you. I'm heading back to ancient Rome. It's been a good week. I'm glad to be back. Got married a couple of weeks ago. Spent 2 weeks on the beach in Florida. Fun and sun. It was all of that. Now looking forward to the next couple of weeks, months, years, and decades with you. All right. Thank you so much for the time. That is all for now.